In the absence of that, I think the worst of the sell-off is going to happen this week. And, I would expect actually March to be an up month for the stock market. I know it doesn't feel like that because of the way the end of February felt, but...
Comes in like a bear, goes out like a bull.
Yeah, it probably comes in with the better weather. But, the things like software, the Mag 7, and the crypto all had early weakness. They're all probably in the final stages or have already bottomed. We are in a crypto winter, so price doesn't matter. Capital is looking at gold and silver and ways of, hard assets, but that isn't always going to be the case.
Lee's near-term market call centers on seasonality and positioning. Despite a weak finish to February, he expects March to be an up month. His reasoning blends technical factors with macro stabilization. Several major groups, software, the so-called Mag 7 mega-cap technology stocks, and crypto assets, experienced early weakness. In his assessment, many of these assets are either in the final stages of bottoming or have already formed a base. Before we go on, please take a moment to like this video, subscribe to the channel, and turn on post notifications for more content like this. Every action helps with the YouTube algorithm and greatly supports the channel's growth. Thanks for your support and enjoy the video.
Nobody likes to see headlines and the images of explosions and war. And so we know risk premium jumps. That's why the VIX jumps. But it's not really going to change the fundamentals of the U.S. So in the past, markets kind of sell off into the buildup, and then they tend to do better once the battle begins. And I think this is going to be similar.
We got to watch across the board, obviously, gold and the yield curve, but as in oil, obviously oil, it won't affect us in the economy at this point. But I guess there's a scenario where down the road it could, isn't there?
Yeah, I think a lot of experts are going to worry that this could, encompass a larger conflict. Something that would be, World War III or something.
Right.
But in the absence of that, I think the worst of the sell-off is going to happen this week. And, I would expect actually March to be an up month for the stock market.
What about the price of oil, which has been such a huge benefit, lower prices of oil to the economy, to the consumer? I realize that we are self-sufficient, but a lot of other countries aren't. If you look at China, if you look at India, Japan, is there a point that it gets more expensive, and if it gets more expensive for China, that is then exported to the rest of the world?
Oil's going to create a price shock because oil, it ends up so much in the economic supply chain.
Even what we produce here is going for 72 now, so it doesn't matter whether we got plenty of it, but oil companies are obviously going to reap some benefits, but consumers, this will filter through in a time when we're still inflation phobic, I think.
That's right. In the past, oil shocks are actually more at risk of maybe tipping a weak economy into recession.
And that's not where we are.
Yeah, and so I think instead of thinking the Fed would be hawkish, I think the Fed might be dovish on a spike in oil.
This market is not doing things that you didn't think it might do at the beginning of the year. And it had nothing to do with what the developments of the past week. Block. That makes people think AI is
coming for everybody.
Maybe we're underestimating. Unless this is the same guy that had 3 times as many at Dorsey, 3 times as many employees at Twitter as was necessary to run that outfit. So I don't know whether you paint a broad stroke about AI with what happened there, or whether this is a one-off. I tend to think we better get used to this, no?
Yeah. I know many companies that are rolling out AI workers. Even at Fundstrat, we are deploying these agents and, treating them as if they're employees. But I think we're still unsure whether or not this will ultimately create more jobs or not.
And AI is will kill a lot of companies. And AI itself, the killer is, you could say, had such a run that it is at least richly valued.
Yeah. And, at least in the case of the software stocks broadly, the entire complex kind of has fallen back to where they were last April. To me, that's clearly an overreaction. So I think it makes sense that you'd start to see some of the groups that got hit hard mean revert including the Mag 7.
So I think someone else made that point, that maybe the leaders in building out AI, maybe they stay where they are and stabilize, but maybe you get a rebound from some of the oversold things.
Yeah.
So you think we're getting to the point now where the initial weakness you saw in the markets, we're making a bottom at some point? What do you say will be up for March?
Yeah, I think March is going to likely be an up month. I know it doesn't feel like that because of the way the end of February felt, but
comes in like a bear, goes out like a bull.
Yeah, it probably comes in with the better weather. But the things like software, the Mag 7, and the crypto all had early weakness. They're all probably in the final stages or have already bottomed, and I think that helps lead us up to an up April.
Have you woken up in the middle of the night and looked at where Ethereum is and said, I can't go back to sleep?
No.
Yeah, not worried yet?
No, because, Ethereum, there's the fundamentals, like what's happening. So much is being built on Ethereum now. I mean, almost every major announcement of a tokenized fund is being built on Ethereum. Does
that translate to supply and demand dynamics that make the price go up, though? Or can you just keep building out all these networks at 1900?
I mean, that would be like someone saying all this activity is happening in the United States, but the economy shouldn't boom,
Yeah.
So if it's all taking place on Ethereum, then price follows. But we are in a crypto winter, so price doesn't matter. Capital is looking at gold and silver and ways of, hard assets. But that isn't always going to be the case.
I'd read you buying more Ethereum on the dip. How much more, and does that continue today?
Yes. So Bitmain's been buying about $50,000 or about $100 million of Ethereum every week, but the cash balance has grown to over $800 million. So it's able to, at the right moment, make a major buy of Ethereum. So I think we're getting ready for the crypto bottom. But we're still buying about $100 million a week.
What unites Lee's perspectives on war risk, oil, AI, equities, and crypto is a consistent theme. Differentiate between cyclical volatility and structural deterioration. Headlines create noise. Volatility spikes create opportunity. Oil shocks matter, but context matters more. AI disruption is real, but so is overreaction. Crypto winter suppresses price, but not necessarily development.
The cryptocurrency market cap is coming in at around 2.29 trillion. This is still about 50 to 55%, I think 53.55% below that quote-unquote fair value logarithmic regression trend line. One of the things you'll notice this cycle is there wasn't really a period where the asset class went durably overvalued, and we talked about that through the cycle, and the reason it never went durably overvalued this past cycle was because altcoins never really joined in on the bull market. Very similar to what happened in the 2019 bull market, where we never really had a durable overvaluation because altcoins never really joined in on the fun. It was primarily Bitcoin, and then when Bitcoin topped out, there was then no rotation into altcoins. The asset class slowly bled out. We eventually got a recession, and then liquidity, all the conditions reset, and then we had another, bull market that led into euphoria. Right now, I think we're in this down period that we had in late 2019. It's just happened to overlay with the normal midterm year bear market that we're now getting in 2026. And so really, if you think about it, it all happens to align perfectly. The 4-year cycle plays out. We just had a non-euphoric top. Now, the hard part now is if we didn't go to durably overvalued, can we go the entire year without really starting to creep down to this lower regression trend line? Right now, the total asset class is around 2.3 trillion. The lower part of the regression band right now is maybe a little over 1.5 trillion. So there's still some room for the asset class to move down in the midterm year if it wants to. If you look at Bitcoin, if we look at Bitcoin's total market cap, the market cap of Bitcoin is around 1.33 trillion. Not too long ago, it was double that, right? We were about 2.5 trillion. But you also have to keep in mind where the total 3, or let's say total 2, there's 940 billion in the altcoin market, right? So you have 940 billion in the altcoin market. The entire asset class is right around 2.2 to 2.3 trillion. So with Bitcoin making up the difference, there's still more in Bitcoin than the altcoin market, but if Bitcoin continues to go down, which it likely will as the year goes on, it will drag the altcoin market with it, almost assuredly. Now remember, bear markets they don't go in one direction, right? We would expect them to have counter trend rallies at some point. I'm not an expert on predicting when those counter trend rallies will occur. Historically, we usually get one in March, but there's no guarantee that we do, right? Like I'm not trading those ideas. I'm just speculating, hey, this is what normally happens, but I think the bear market still has some time to play out, even if you do get a counter trend rally, potentially back up to the bull market support band or now bear market resistance band at some point. But for now, we still remain below the fair value logarithmic regression trend line, and my guess is that we do not go back above it this year. I think it's going to take a while for us to get back above it. Normally, when you get in the midterm years, the asset class just falls back down to the fair value. The issue now is if we're in a bear market, which I think we are, and I think we have been since October, it seems like there's a good chance we'll eventually make our way down to the lower logarithmic regression trend line, which we do hit occasionally. When you look at the chart, it might not look like we hit it, but we actually did hit the lower logarithmic regression trend line back in 2020. When you look at the chart, you'll see that the lower band here was about 100 billion, but the asset class, it looks like only went to about 140 billion. But you have to remember, we're only using daily closes. And so if you go look at the total market cap of crypto in the pandemic, it actually wicked down right here to around 100 billion. And it's just something to keep in mind. So if we include intraday wicks, then you could argue that we did tag that lower regression band back in 2020. Now you might argue, well, hold on a second, Ben, that wasn't a pandemic-induced recession. I'm not calling for that. But what if we are? Like, what if we do go into a slowdown, a contraction in the economy, and it's just playing out over a longer period of time, rather than getting just a V-shaped bottom and then move out of it? What if it's just a slow bleed down to it? So just keep that in mind. Later, regression band, if the total market cap ends up meeting that regression band later this year, and it looks like the business cycle's starting to potentially turn, and that could be a signal that, hey, we're starting a new market cycle. For now, there's still a little bit of ways to go. In terms of the extension from the fair value, we are pretty low. But again, as we showed earlier, we have gone lower before, and we went lower in 2020 when you include intraday wicks. We also were lower when it first launched in 2010. So this has been a pretty brutal bear market so far. The reason it's brutal is not because the price action is bad. It's more so because we're dropping from a top that was not really that much higher than the prior cycle top, not even a 2x move higher. So Bitcoin and the entire asset class, the entire industry, is finding itself at valuations that it was at many, many years ago, right? The total market cap of crypto was at the same valuation in 2021. So you're talking about 5 years now where the asset class hasn't really gone anywhere. One of the things that people talk about frequently are lost decades in the S&P 500, where like you don't go anywhere for 10 years. And we look at it and we're like, oh, that must really suck. But the reality is, a lot of times when you're in these lost decades, you don't really know you're in it until the end of it. Like when you're up here in 97, you're not necessarily convinced that you're going to be at the same valuation in 2002 and the same valuation in 2009, especially considering that the markets continue to go up, but eventually they fell, they went back up again, and then eventually they fell again, and then you had a lost decade. And in the 70s, you can see there was a lost decade where the markets only made marginally higher highs and marginally lower lows until eventually it broke back out. So when you look at something like the total market cap of crypto, and people talk about like lost decades and how comical it is that other asset classes have had to go through it in the past, one of the brutal realities is, guys, crypto's at the same valuation it was at 5 years ago. And if the bear market continues into later this year, which it seems like it might, let's say it can partially recover next year. Normally the pre-halving year is a recovery year. And then let's say it gets back up to these levels by, say, late 2027 or maybe 2028. Then you're at the point where you're looking back and you're like, oh, the valuations are the same as they were even longer ago. And if the asset class continues to drop, then, at some point you have to wonder, you're comparing to where we were in 2020. Is there a chance that in 2027, 2028, we'll be at similar valuations that we were at 5 to 10 years before? It's possible, right? And that's the brutal part of lost decades, where the asset class just doesn't really go anywhere. It doesn't mean the asset class is broken. I've heard a lot of people express concern that, that people with deep pockets will never view Bitcoin as a serious investment. But I mean, I don't think that's true. I think that for a long time, the S&P has done similar things, and it still continued to eventually do well. It's just, I think a lot of people think that crypto is different in the sense that it will only ever go up and to the right. But in reality, eventually, a lot of markets tend to behave in very similar patterns, right? You will see similar patterns across different markets. And it's just important to remember that it doesn't mean the asset class is dead. It's just going through a maturing process. Or it's existing within the confines of a macro regime that it hasn't experienced before. When you had high interest rates and high inflation in the 70s and 80s, the stock market didn't go anywhere. And for the last few years, we've had issues with rising unemployment rate and inflation in 2022. And of course, Bitcoin hasn't really gone anywhere. And that's just the reality. I mean, I do think that the asset class will succeed, but I also believe that we are, in fact, in a bear market now. I think that if there is a lower high, or if there is a rally, I think it will likely result in a lower high. There's a lot of things coming this week. You have the ISM, which everyone seems to care about now that they never used to care about it. If that comes in hot, and if Bitcoin can bounce with with these recent geopolitical conflicts, it might lead to a counter trend move. There was also a counter trend move in February, starting in February, early March of 2022, when we had the Russia-Ukraine conflict beginning, which is still even going on, but it still resulted in a lower high. And ultimately Bitcoin then bled out into the summer months. So bear markets are brutal. Bear markets make fools of both bulls and bears. So far, it's been a little while since the bears have been made fools of. I mean, they were kind of made fools of over here for a little bit, but this is a typical counter trend rally that Bitcoin usually gets, in the midterm year where it's then rejected. And you could argue in terms of market structure, if this rejection there is the same as that one, then you have to wonder, are we right here? Is that where we are, where Bitcoin keeps trying to pop up, but ultimately it's just likely going to bleed out again, go lower, and then eventually go sideways until the bull market support band or bear market resistance band in this case, continues to drop. So could it do something like that, where maybe it pops a little bit, comes down, goes sideways, drops again, and then we try to build off of that? Certainly a likely scenario, right? It certainly is.
Markets do not wait for comfort. They move when uncertainty narrows. Tom Lee's macro framework urges investors to look past the emotional intensity of headlines and assess structural reality.